Welcome, ladies and gentlemen. My name is Dustin Kircher. I got my partner here, Ben Dreicer, and we're with MHP Nation. We have Hansel Rodriguez on the show today, and we've been trying to get him on the show. He's got an impressive background. He's grown quickly, and really looking forward to seeing and hearing about his journey. But Hansel is currently sits as a principal of investment strategy and acquisitions across Core, which has various investment strategies and focused on the manufactured home communities or mobile home parks. And he has an extensive background prior to that, and we'll let him get into that, which I find it very fascinating. So, Hansel, thank you for coming on the show with us today.
No, absolutely, guys. Thank you for having me. Seriously.
Yeah. So I was reading some of your bio of what you did previously. Maybe if you want to touch a little bit, I mean, because it's not that you just got into this space. You've been in doing this, and it's impressive of what you've been involved with. So if you want to touch a little base on that a little bit and tell us what you've been doing prior to getting to the mobile home park space.
No, for sure, man. And you're very nice for saying all that. So, like, I will say, it's even today. I kind of joke. It almost feels surreal. Some of the things that we're involved with and the people that we have on the team. I started like everybody. I was a sophomore in college. Didn't really know what I wanted to do. Was lucky enough to work for a developer at the time that was willing to take me in for like an unpaid internship, right? And I don't even think that's legal anymore. But like but back then it was, right? And
Yeah.
so the guy, just for 1 year, him and his team took the time to teach me what real estate was, the valuation was, and all those things. And so that kind of kicked off my interest in real estate. And though, one of the sound pieces of advice he gave me was like, hey, if you want to learn about investing, you should find a way into, investment banking, which, as you guys know, it's like the real estate brokerage of companies.
Mm-hmm.
So I spent my first 4 years cutting my teeth on the M&A side, spent 3 years as an analyst at Wells, working on really just industrial companies and helping
Okay.
them buy competitors in the space.
Mm.
But it's funny, like out of all the cool deals and things that we worked on, my biggest learning experience from that was what is an annual report? What is equity research? And my God, like you should just read a lot. You can learn a lot from the world if you just read, right?
Yeah.
And so I was there for 4 years, did 3 years at Wells doing corporate M&A, did 1 year at Eastfield doing real estate, a little less than a year. And through, learning different industries, fell into the mobile home park space, right? And again, everything starts the same way. I started there, bought my first property, was managing, collecting rent, doing everything that you would imagine. Had a really good partner at the time. His name was Corey. We had partnered up to do it because I was still working
Mm-hmm.
full-time job. And kid you not, now that has evolved into we've acquired, I think, 27 assets in the mobile home park business alone. Um,
Jeez, you're
yeah,
growing.
across,
Because
dude,
I think last time I heard, I don't know when that was like 19 you had. Now you're at
I'm
20.
telling you, it's beyond my day to day. It's and I could be wrong on the number, but like it's 27, I believe, 13 states.
That's when you
But
know you're big and you can't because you can't remember how many.
no, it's not like that, man. No, no, no. But I'll tell you, so it's been a ride and it's been a very exciting journey. We're now up to those, that amount of communities, 13 states, right? Different time zones. Um,
Jeez,
and
yeah.
and I credit all that to the team, right? So I started, I'm very much, people that know me will say I can be a little intense, but I'm a deal guy. I get excited about the deal. I love the negotiation piece. It's fun, everything else you just have to do, but like the deal side is exciting. And but now, man, we've just got a really good team, right? Like even
Yep.
acquisitions, we've got a team of analysts that sits below Ricardo, who heads our acquisitions. Ricardo's incredible at that, right? We have our president, Adam, who oversees the entire operation on the mobile home park side. We have a director of operations below him, right? So it's kind of filled itself out. And that's what I've been kind of trying to get better at is, hey, like I can't do everything myself. I've got to depend on the team and
Hmm.
and the processes that we build. And you kind of alluded to it. That's what's allowed me a little bit to venture to other, strategies. So the mobile home park business is going. We're wrapping up fundraising for our latest fund. That fund is on pace to close in 2 weeks, and we've raised
Nice.
25 million for that fund. Um,
Awesome.
but now we're jumping into industrial outdoor storage, and that's equally as exciting. So we're buying industrial real estate, particularly land. Think of like your Amazon Sprinter van. Where do they
Hmm.
park when they're done with work, right? And we want to be the real estate in which they would park, construction equipment, all that stuff. And so now that's a strategy. We're partnering with a hopefully soon a large institutional investor to do that, and so that's a
Okay.
separate leg.
Wow.
But it's exciting, and fundamentally, as I tell her, I just focus very much on the deal side. That is what's fun to me. That's where I
Yeah.
get, and I could tell you guys, I heard an operating agreement before I jumped on. I'm like, okay, it's all the same things at the end of the day. So,
Yeah.
yeah.
Nice. So when was that? What year was that for your first park with Corey?
So Corey was end of the year 18. So we
Okay.
bought that deal, very small asset, seller financing, right? It was kind of like the perfect deal you'd read on like a Frank and Dave
Oh yeah.
podcast. Yeah, no, literally couldn't have been better. And then because like anything, when you start, you're a little scared. And so we did that. We had moved occupancy, we had improved the income, and then we refinanced it and got everybody's money back. And when I saw that, I was like, oh my God, like this
This
could
is yeah.
be, yeah. I was like this. And Corey, if you've met Corey Woodruff, he's a very high energy guy. So he got me hooked on the strategy. And so but anyway, that was a start. Yeah.
Nice. And so from there now 27 parks.
Yeah.
What's the space count, or how many spaces are you guys looking at right now?
We're over 2,000. Yeah, I think 2,100 today. But we're
Nice.
fingers crossed, hopefully buying an asset tomorrow. And yeah, so 2,100
Cool.
roughly. Yeah.
And from park one to now, what has been kind of the learning experience of getting to where you're at right now? And you talked about building out a team, which is obviously very important.
Yeah.
What part of that team has really you seen the growth happen in in your business?
So it's interesting, like it is team, right? So being a product of the deal side of the world, you are so focused on yourself and the details and spreadsheets and numbers and circumstance. You don't realize the amount of people that go into every one of those decisions, right?
Hmm.
And when you're running an investment company, it is so about that. Like the numbers are like something you like look at it and you don't even look back at that at the end of the day. You're focused on who's the manager, how good can they run those properties, do you have confidence? Is there risk to that? Do we have the right district oversight? Do we have the right back office to support them? Right? Like
Hmm.
I will tell you, like there is no learning experience I've had greater than the team element of it. And it kind of took me making some knuckleheaded mistakes to realize that. Like we brought in consultants and stuff as we were growing. And I was trying to run management like deals. I was like, okay, here's an issue, here's a solution, just get it done. You don't realize
Yeah.
like, hey man, like this is the guy's 1 year anniversary, right? Like, or he's his birthday. It sounds ridiculous, but when you're thinking about running a business, like that stuff is so
Hmm.
important. And tenure, like making sure people want to stick around and they want to invest in the company is huge. Like that is, if you don't have continuity in a business, it doesn't matter how good the deal is. You have so much risk in the new hire and the training and the onboarding. Like,
Yeah.
yeah, dude, I could write a book about it. I mean, it was like a life-changing experience. Yeah.
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 Yeah, that seems to be the common thing is like as a business owner, right?
Yeah.
Is learning how to manage in the way to keep employees happy, because it is the lifeblood of your business. If you have good employees, you're going to have a good business, right?
That's
You're the
right.
big picture. Now you need the people to help operate the day to day out. So and
Exactly.
I've learned that too. Like I've had a revolving door of acquisition managers in a different business, and
Yeah, exactly.
it's not fun trying to replace these people. So, but
And that's seat too, right? So talk about one of the most important seats. If that guy leaves, the institutional knowledge that goes with him, right?
mhm,
Like that's I mean, and again, if you think about deals is like, okay, deals doesn't work out, on to the next. You don't even think about it, right?
yeah,
Where in people and in management, it's so different. Like,
yeah,
yeah.
yeah.
And then can you go a little bit more into detail about the team? So what is the structure right now? Are you guys now equipped to continue to expand exponentially, or do you have to continue to build out the team? And like what's the structure right now look like?
Yeah. Well, a couple things. So I'd say We are, I would categorize us as a self-managed, investor, right? So I am one of those folks that thinks that, in our business, particularly mobile home parks, it's just not multi. It's hard to have an outside third-party manager do it, and I think have the same level of care that you'd have if you ran it yourself. So I think of MH more of like an operating company. So the operating company is structured where we have Adam, he's the president. Below that, we have kind of our district heads, right? So HR, capital improvements is led by somebody. So that's everything from construction management, CapEx, affecting the things that we want to do to improve communities, right? And oh, sorry, the light went off. But yeah,
I think
let me
you're
turn.
good.
They're not. Oh, there we go. Yeah.
Yeah.
But so anyway, so then we have our director of operations that makes sure that across the country we have people that are following the same schedule, doing the compliance things that we need, making sure we have some level of SOP on everything that's done. And then of course, head of acquisitions, right? Like I probably spend the most on that outside of fundraising, just because that's probably where I've not been able to let go is every investment decision. I look to, I kind of admire the biggest investors in the world in the sense that despite the massive size and skill that they have, their senior leadership is on every call about an investment decision, right? There might be thresholds, right? Like there might be stuff that's too small for their attention, but they at least look at the memo or they talk to the person who read the memo. And I do believe, like having lived it, I don't think that that's replaceable, right? The owner, the person that understands the risk, that's seen the risk the most, is the best equipped to provide, potentially challenging opinions on that. And so, yeah. And then below that is everything you would imagine. So district managers that cover multi-regions. We have community managers at the field level, and then the maintenance guys. And I think what we all are reading, trying to scratch our head open is like, where does AI play in this world, right? And we're still figuring that out. We've had some interesting guys and some interesting conversations to kind of analyze the business and say, hey, like, here's something you do that's so manual. Here's a better solution for that. But it's still kind of an open-ended question there.
Yeah, that would be very interesting what role AI can take in the manufactured home communities and running those, because it is a lot of I feel like it is a lot of day-to-day kind of manual stuff that I'm not seeing too much where AI would take over on that, but
no, that's right. But look at our friends in multifamily. Like there's some really interesting stuff. Like again, I don't know that it's there today. Like it's being discussed. There's tools you can implement, but simple things like, the concept of calling somebody to ask what your rent is, or the concept of trying to reach somebody at like 2 a.m, right? There are now these kind of chat GPT like systems that, that could do 40 different languages, by the way, in some instances. But hey, like you ask the system, what's my rent? And it'll respond to you in a different language, right? What it is instantaneously, right? And you see it with like big banks and stuff. Like if you call Bank of America,
the customer service side.
Yeah, exactly. I am not a tech person whatsoever. Like it's almost pathetic to an extent. Like, but I hear these guys talk about it and the ways that they're doing it. I'm just like, we may not understand it today, but in 10 years, it's going to replace a lot of what we do. And make us that much more efficient, right? Which I'm really excited about.
Yeah, I definitely see on the customer service side, like for your residents that are calling in with answers or service requests and stuff like that, that can all be pretty automated. Even that with CRMs right now can be done. But like if you have an actual AI that understands who to connect with and make the service calls. And then on the other side, then is potentially even the evaluations. If you get a good machine learning and you just throw in the numbers, spitting out the your performas and all that, that definitely could be an option too.
Dustin, I sat in a meeting a week ago. This guy is a really talented guy. He's like, oh, I took like a 6-month sabbatical and created like some tool AI thing that essentially pulls 1.5 million sales comps a week. And the model then identifies, like this for single family, identifies the valuation or the rents, and we'll literally do like cash on cash calculations, return calculations. I mean, if you think about the work that takes for analysts to do today, and the other, and then it's getting 1.5 million new inputs of data nationwide. a week. I mean, it's unbelievable. And
Oh
so,
yeah.
and I was just saying, I'm like, he's like telling me, like, obviously, like, I don't even use a QR code for my business card, right? So, like, like, he's like, oh, you don't have one of those? I'm like, no, not at all. I don't even know what that is. But it's crazy. Like, and people are doing that as like a hobby. So imagine
Yeah.
the world that we'll be in a couple, in a couple years, right? So
Yep.
it's exciting. I mean, I'm trying to figure it out. I'm trying to push our guys to spend more time with it, but it's crazy. Yeah.
Dustin
Yeah.
and I probably once a week have a conversation of what, like, where would we be if we didn't have AI today, and just how
Oh,
much
really?
like
Well,
we could.
how are you guys using it? Please educate me. Like, actually, yeah,
ChatGPT mainly, and it also helps with some of the social media stuff, putting the content out there, like the images and all that. And then beyond that, just like deciphering contracts sometimes. Like if you want to get the
yeah,
bullet points of a contract, of an agreement of any sort,
yeah,
throwing it in there and saying, here's the stipulation, or here's your main points, here's the things to be concerned about. Yeah, so that is very helpful on that side. I
yeah,
want to
and
get to the
that,
point
and
where it
yeah,
just is automatically entrenched in our business and
We
knows what
don't
to do without even us asking.
I mean,
It's going to be
I don't
there.
know. It'll
Yeah.
get, dude. No, and that's the conversations I've had is that, internet took 20 years, right? Like if you think about dial up and then
Yeah.
when, where we are today, it took a long time. This AI stuff, and I just call it stuff because I don't even truly comprehend it, but the pace in which it is improving itself, updating, constantly changing, and the use of it is so instantaneous that it's like almost every week I hear something. I'm like, how did I even miss that? Like, why is that not in top of, like, the New York Times, right?
Yeah.
And so the pace is crazy. Like that's what blows my mind. And they've basically recreated the brain in a computer. And if you think about the power of something like that, I think it's very
Yeah.
exciting. I mean, there's obviously scary concerns to that too, right? Like, God, what happened? Do a lot of people lose their jobs and things like that? Like, to be seen. But I think if you look like at the optimistic side of it all, it can be really exciting for guys like us.
I'm
Yeah.
more
There's a,
scared of robots than of
oh,
the
yeah.
jobs.
Yeah. Wait, say that again. Sorry.
Oh, I said more scared of like the robots taking over and becoming conscious and taking over the world than
Like,
the loss of jobs.
I just trust there's enough smart people to figure that stuff out. Like, I'm not even I'd go down a rabbit hole trying to even have an opinion on that.
It's
Right?
funny when we're using ChatGPT and we're, on a Zoom
Mm.
together and we're working on something. I will when I request something from ChatGPT, I will put please take this and do that. I will always use the word please. And I tell Ben, I was like, it's because when the robots and AI takes over the world, they know I was nice and I was nice to them.
Oh my God.
Uh,
That's awesome.
Back, back to mobile home park stuff.
Yeah, yeah, right. Sorry.
it's not a doomsday podcast.
Yeah, right.
What, as far as your ideal asset, what is your buy box? Do you venture out of that? Are you a Frank Rolf diehard? It has to be city water, city sewer, three
Yeah.
pool. What's kind of your overall?
Yeah, I mean, so no, we all admired Frank and Dave for the just the amount of resources that was out there, right? When we're all
Mhm.
starting, we're like, how do we do it? And then Frank and Dave are like, well, here's exactly how to do it. So that was just incredible resources. But no, I think the beautiful thing about our industry is you can quantify almost every risk, right? So
Mhm.
what's our buy box? Our buy box is still a continuation of what we've been doing for the last couple of years. We want to be in population growth centers. We want to be in job growth centers. We want to be in markets where we are seeing a huge demand for affordable housing. And so what does that mean? That means Charlotte, North Carolina, Florida, South Florida, Orlando, Florida, Phoenix, Tucson. We love those markets, right? Texas and Dallas and Austin, although there's some changing shifts in multifamily that, where there's a
Mhm.
lot of building and we're worried about, what that might do.
Saturation. Yep.
Exactly. Yeah. And we're all reading and watching that. But that's the same strategy, from a physical, what mobile home park we buy, we tend to do the best between the 50 to 150 site community. We buy a lot of that. And I think that's just a function of the returns that we're targeting. As you know, there's obviously the pension funds, institutional capital, the REITs, although REITs have been more silent lately. And they're targeting very kind of, very, very low double digit or high single digit returns. And we're opportunistic. We're still targeting opportunistic returns. So that limits our buy box. But no, it is not, it is far from the Frank and Dave model because we do want to buy in these growth centers. That means you're paying a bigger price than you would otherwise in your Midwestern markets. And we're also not big on like, we have, I feel like we just finally reached the crux of a really good operating team. So, but we're still not doing heavy, vacancy, big, value add projects. We're still focusing on closer to stabilized assets and good markets where we think just the market alone is going to be a good place to be
Got it.
in the next, couple of years.
And are you buying like things on septic,
Oh yeah.
lagoons? Yeah,
Yep.
doesn't matter.
Lagoon's scary. I that one is just an environmental, issue, right? And
Hmm.
we've all heard the, scary stories. But every, wastewater treatment plant, septic tank, well, absolutely. We'll do that all day. It's a function of risk, right? So I always
Yep.
tell people the thing about septics is, yes, it's a septic tank. Absolutely. By the way, before like the 1970s, 1980s, that was super common. So it's not a crazy thing to understand. It's just what's the cost, right? So if you've got a community with 100 sites, there's 50 septic tanks. When was it installed? What's the useful life of that model of septic tank? Is the drain field functioning? You can quantify that down to the dollar, right? And
Hmm.
and so then it's just a function of, did you set enough money aside to deal with that when that day comes, right?
Yeah.
And so that's my view. Wastewater treatment plant, same thing. Like we do kind of govern ourselves that a deal's got to be pretty large for us to do a wastewater treatment plant, because if it's too small, if it's below, call it 5 million, it just gets a little difficult to survive a bad day where you have to replace it. So no, I don't believe in absolutes. I believe in, here's the risks, here's the mitigants. Can we get past that comfort level to make a decision? And if not, then we'd rather pass on the opportunity. Um,
Nice.
yeah.
Yeah, hearing you talk about what you're looking for and different things, it would be amazing to see how you're underwriting your deals, because I could tell you pay attention to the fine details of when you're looking at parks, right? Where I feel like a lot of
Yeah.
people kind of skip over. So yeah,
Yeah.
kudos to that. Obviously it shows you have 27 parks, and you're going to keep growing. So, curious, you mentioned that you just had a fund, you're closing out a $25 million fund. Were you syndicating prior to this fund,
Mhm.
or did you have other funds that you started? And when did you start doing that? Like what park number did you decide to start a fund?
So I was very late to the party, actually. As you guys know, right, you're doing other sectors. 2021 was a year, 2020, 2021 was like, it was a party. You could have done anything and you could have raised money. That was a very different time than today, right? So
Yeah.
back then and I didn't have the track record. So I was fortunate. I learned a lot from my prior job about, analyzing things like that. But, investing is a different game, right? You live with the consequences of the decisions that you make. It's not like brokerage where, once you sell it, you're done. You've made your fee and you'll never hear from them again. And so, yeah, so we started, the first 19 deals were deal by deal. And so that's a very long path, right? Like,
Mm-hmm.
and the way it happened was I at first I didn't have confidence in myself and our strategy. I wanted to prove it out. So we bought a couple deals with partners. That evolved. Then we basically made a mini like team where I had certain contacts I knew that would help me fundraise. But then it got to the point where I was spending literally like almost my entire day fundraising, because we had 2 or 3 different transactions in different stages of diligence. And then
Yeah.
I was like, okay, this is actually insane. So I am getting away from my principal job, which is making sure we make good investments. And so I had a discussion with one of my advisors that was helping us in the fundraising side. And we just decided, you know what? And at the time, they were like, you're still too small, blah, blah. You know how it is. Everybody always tells you
Mm-hmm.
no before they say yes, right? So we went the fund route. And so that would have been deal 20 to 26, I believe. No, 20 to 25, actually. And so that was a smaller fund, 14.7 million, if I'm not mistaken. But it just got us going. It was a 6-month fundraising window, whatever.
Okay.
We then deployed that in a year and then immediately went out with fund two. Fund two, we launched March of this year. We're now on pace to close in November. And well, yeah, so 2 weeks from today, and we think we'll hit we're right next to the target of 25 million.
Nice.
Um, And so, yeah, again, just a function of doing it right. So it literally gets very difficult to do investing at a certain scale without a fund, right? And people
Mhm.
ask me why. It's painful, it's stressful. Yeah, of course, all things are, right? So if you're growing at a certain pace, it is, it's you definitely have a certain level of pressure to execute, to meet the return that you set out, to do a good job of management. And obviously now you have a lot of capital you got to put out. But the other side of that is you have complete discretion. And what does that mean? I don't have to stress out about the money, right? And so
Yeah.
that is
Yep.
an incredible relief, right? We all know what that's like. You can have the best deal in the world, but you have no idea if you're closing until the day of closing. So that's a
Yeah.
crazy, crazy
Yeah.
way to live. Yeah. And so
Yeah.
it was very worth it for us. And yeah. So
Yeah, no, I agree. And we've talked about like, okay, when does that point come that we start looking at the fund? Do we want it? It's because it's another management aspect to it, right? I mean, you
yeah,
have to have personnel to send out all the distributions and reporting and all this other stuff.
yeah,
Which you still got to do on the syndication side, but it's just a little bit more involved. You're heavily scrutinized SEC, so you got to make sure you're crossing your T's, dotting your I's, and just doing that. Um, but we do see like the benefit of like, okay, if you see an asset, it's not now waiting to get a soft commitments from
yeah.
your potential investors. You can just act quickly on it, and then on top of it, it's kind of, if it's a multiple asset, then you're mitigating the risk of the whole
Yes.
portfolio, right?
Absolutely. Yeah, no, it's crazy, right? So well, first of all, I recommend everybody, if you've got a good strategy, if you have a repeatable process, right? Like again, how do we do it? Well, we literally do an investment memo for every single deal in excruciating detail. So like
Hmm.
today, if you were to join our firm, you would have 27 case studies on every deal we've ever done, and you could pull the financials to see how we've performed, right? So
Nice.
that process is what allowed us to do a fund, because now I could say, okay, I can go spend 6 months on the road raising money, right, and having conversations, getting people comfortable with our strategy, and we've got an incredible team behind me that can execute on that strategy, right? And we do have a buy box, right? It's not the Frank and Dave buy box, but we do. Like, there's very clear parameters around home prices, multifamily
Hmm.
rent. If there is not a certain level of comfort in the economic situation in that market, we won't do it, right? But if you've got that, if you can narrow that down, right, like an engineer could in terms of what you're looking for, you can absolutely raise a fund. The challenge about a fund is it's a full-time job too. So you just got to be ready for that effort. And you do have to have a good team, right? Like,
Yep.
I do see people that try to do it all in-house. I would actually strongly not recommend that. Hire a good fund admin, right? Every time you're not sure about something, they're going to tell you what the right way to do it is. They're going to coach you through it. They're going to advise you through it. Hire a really good auditor, right? If you have a good
Yeah.
auditor, they're going to make sure you don't make mistakes. A lot of mistakes, as we all know, are not intentional. They just happen, right? And you don't have the experience. So get a really rock solid team on legal, on accounting, on compliance. And it's no different than a syndication, right? And to your point, Dustin, like, that's the biggest difference people don't understand. Like, even when we were syndicating, you'd meet an investor, you sell them on the strategy, you sell them on yourself and your firm. Well, now the other thing is you got to also look out for them, right? And some of these guys get a little too excited and they want to put a huge commitment of their savings in the deal, and you have to be the one, hey, settle back. I do think this is in Florida. Florida gets hit by hurricanes. There's insurance risk in this market. I think it'd be more prudent to diversify it with a deal in Tucson, with a deal in
Yep.
Pittsburgh, where your biggest scare is a blizzard, right? Which isn't going to impact the home. And
Yeah.
so the fund does that by mandate, right? If you do a good job at the fund level, thinking about portfolio theory, like,
Yep.
you will not have to worry about that. And you provide that kind of level of comfort for everybody, right? And I think that, to me, that alone is worth going into the fund business. You just got to be able to execute, right? There's two things that can kill you in a fund: poor performance, for sure, and then the second thing is you don't deploy the capital. So, like, don't overshoot on what you want, what
Yeah.
you think you can execute. But
Yeah.
yeah.
And are you having a third party admin and auditor? Is that how you're kind of running your fund, or is it in
Yes.
house? Okay.
We have a really good controller, and we have an in-house accounting team, and we also
Hmm.
have, an outside accounting team that helps support some of the junior stuff. But when it comes to the fund, yeah, we have an outside admin, outside an auditor, outside everything except, the accounting at the property level. It's just cost efficient to not have someone else do it from a compliance perspective. But you do want, the professional way to do it, and every advisor will tell you, is go ahead and have a third party person whose life has been managing funds, right?
Mm,
And investors will ask for it too, right? It's just a good individual check and balance on yourself to make sure you're doing things appropriately.
nice.
Yeah, very smart.
Yep.
You know?
I got another question back to more like as far as your
Yeah,
opinion when it comes to park-owned homes, tenant-owned homes, and then
yeah.
looking at it from a valuation standpoint, and also strategy if you like park-owns or if you tried to convert them all, and then also RTOs where they fall in place there.
So everything depends, right? So I think, obviously the general best deal is resident owns the home and we're buying it, we're improving it. Roads are old. We need to repave roads. We need to upgrade infrastructure. That is your ideal deal, right? Because you've got homeowners. It's a lot easier to manage all that. But we bought properties with rental, right? I think the strategy for us is identifying opportunities where we can get to a certain cap rate within 5 years, where we think at that point we can refinance and return investor capital. And if we can do that, then we hope to own these assets forever, right? I say forever, I'm not allowed to say forever, for longer term, right? And so that's our goal. I liked our strategy. Rent to own, right? We haven't done much of that. I do think there's some challenges there. We have almost done none of that, actually. If we have done it, it's because maybe we weren't fully aware of those rent to own contracts, and sometimes we might have missed it in diligence. Park owned homes, we will do, but then it's, as you know, you're buying a mobile home park. If it's all tenant owned, you're looking at it for income purposes, right? And when you're buying inventory, now you've got to go do complete diligence on every unit. Bed, bath, square footage, how much will it cost to renovate? What do you think the resale value is in the market? So now you're underwriting that as a completely separate purchase almost. And we will do it. It's not to say we won't, but our target, even if we do buy it, is to convert to resident owned. I think we sit today at like something like 6% of the portfolio is inventory homes where we might
Okay.
rent it. Yeah, so it's very small. And as you know, the reason is it's financing. So the financing markets for that are fairly challenging. So if we do buy it, it's because we know we can get it to agency financing or securitized financing and through conversions, and that's why we'll go in that direction.
Got it. So with your fund, are you purchasing these properties then like all cash? You're getting it. You're putting your business plan together, and then you're financing at a certain point. And is that what you're doing?
No, I mean, there are definitely guys much more aggressive than us on that. And so I guess like our strategy, going back to Ben's question, our biggest governors are, we don't like to exceed leverage, right? I think we sit at like 51 or 52% leverage. So of our entire value, half of it is debt. That's pretty rare, right? Like some guys
Yeah.
really put a lot of debt on. There's risk to that. And it's just not something that we feel too comfortable with, because we're buying more stabilized assets.
Yep.
From an execution standpoint, because of that, we do like to lock in debt at closing. So that means minimum 5-year term, ideally 10-year term.
Okay.
And again, why, right? If you look at the last 2 years as a case study, you saw the fastest pace of interest rate hikes since the 80s.
Yep.
And my God, like there were deals that we thought were slam dunks 2.5 years ago. And today, had we owned them and not locked in debt, we would be in a very challenged position. And so when I look at why we were successful and haven't had those challenges, we have long-term debt maturities with an interest rate that was locked in at the day of closing. So we have complete predictability around our income, our debt payments that we owe, and when those debts are due. And as we know, the guys that didn't have some serious things that they're trying to solve through right now.
Yeah, I mean, imagine going from a 4% to 7.5 right now. That's that changes your projections.
No, and it's great. And guess what? Like they're dealing with it, right? It's amazing to see how things can resolve themselves. But
Yeah.
dude, I would not want to have those sleepless nights. Our industry benefits. Look, in multifamily, you have to do that, right? If you're developing multi, I'm not even sure you could lock in debt if you wanted to, right? You could do options and stuff. But same with like acquisitions of existing multi. Like if you're going to be super competitive, especially 2.5 years ago, the only way to do it was floating rate debt. So in our business, so we don't have that issue. Like some owners will literally carry the paper because they own it free and clear. And Fannie Mae and Freddie Mac love the sector. Mobile home parks, as you know, lowest default rate of all real estate. So why add the extra risk of crazy debt? Guys
Yep.
do it, and they're much more aggressive than we are, and they've grown a lot quicker than we have. But it's just an unnecessary risk from my perspective.
Yep. Nice.
Any insight on RV parks? Do you have any? Are you underwriting them?
Yeah, so I wish I could figure out RVs. I do actually. Um, I was actually just having this discussion. There was a time we spent all this time doing the work to do RVs. The problem and the fear that I have with RVs personally, because obviously there's some guys that have done really well with it. Boa Vida, as an example, they do really well with it. Obviously the publicly traded REITs. I don't know. I already have my views on management in MH, and these are homeowners. When you get into the hospitality business and dealing with daily rentals, you've got to deal with pricing your rents every single day. I just don't think, from an infrastructure perspective, we're set up for that. And as you know, too, it's a completely different, drivers. Like gas prices has an influence, right? Season, if you're in the Midwest, particularly, like what time of the year and what seasonal trends are out there. Weather has a trend. That is so different from the affordable housing thesis, which is so clear. We are literally so outpriced for the typical working class American. Like that thesis, bulletproof, right? And we're 7.5 million short on units, is what everybody keeps telling me. Home prices continue to go only in one direction, and we're the cheapest housing in the country, no questions asked, right? RV is a very different business. You're competing with hotels, you're competing with other, camping, resort style amenities that people can
You
go
said
on.
it's hospitality. It's just, yep.
Yeah. And I don't like management intensive businesses. That's not, I'm not cut for it. Not yet. Like,
Nice.
When you were looking at the RVs, were they more like long-term stays? Because it seems like some people are taking these RV parks and almost converting them to mobile home parks or quasi mobile home parks.
well, that's the best strategy. If you can do it, again, from what I know, like I'm not an expert. When we looked at it, the smartest, the most exciting opportunities we saw were you did have a transient RV, it might be like 50, 60, 70% occupied. And then they convert that to a permanent stay, basically homeowners model, right? Maybe
Yep.
it's a park model, they come down for 6 months out of the year. That's a very attractive business. And there's some really sophisticated guys that are trying to do that. The problem though, is if you think about rents are higher for daily rates. So for you to reset that to a
Yep.
lower rent, longer term tenant, you actually reduce your cap rate,
Yeah.
and you've got to spend money to get it there. So I have yet to see how that works from a numbers perspective. Guys have done it though, and we just haven't.
Yeah.
The other thing to keep in mind too is the capex dollars that go into that. They're big. Like you've got to basically convert the infrastructure, sometimes the electrical. It's just, I don't know. I have yet to see it work, but that's the most attractive model. True transient looks super attractive on paper. The cap rates are fantastic. But then my argument is, well, you're buying an operating company. And so if you think about buying an operating company at 10 times EBITDA, I don't know that I would get that excited about it compared to buying, affordable housing, and which is such an in-demand sector. So
Yeah. Nice. I like that insight on that too. It makes sense.
but listen, if you can figure it out, seriously, if you can figure it out, you'll make a fortune, because there's a lot of really attractive. I mean, if you think about how many, family-owned RV parks there are and how few management companies there are to operate them, I mean, it would be a field day. So I would invest in you guys if you could figure that out.
Yeah, the concern I have in certain areas, and I've seen a bunch of RV parks because we're also looking at that asset class, but you see a lot of these kind of failing parks, and you see where they're at. So location also is a huge factor to it. But
Yeah.
if where you're seeing more of these community type mobile or RV parks, what's stopping your neighbor that has also 10 acres from building out a park right next to you, and now it's oversaturated?
Exactly.
So that's
No,
that's another factor to look at.
and as we all know, mobile home park, very difficult to build, right? Like it's
Mm-hmm.
incredibly difficult to get the city on board with a new mobile home park. RVs, though, very different. You do have appetite. It's very, relatively speaking, inexpensive to build. It's your cost of amenities and utility hookups. It's a different risk profile from my perspective, like from a supply, risk perspective.
Yep. I'm curious, who was your first hire in your business? What was their role?
Number one hire at the corporate level or at the field level?
Corporate level. Because you were
So
managing probably everything for a while, right? You had your
I
on-site
was.
managers and stuff like that. Who was it that you first brought into the corporate level that you felt like was needed?
Yeah,
And
no,
would
I
you do
mean,
that again? And who would
yeah,
yeah.
I no, good question. So for number one was actually and I shouldn't say it, but was an unpaid intern that I hired and who turned out to be our head of acquisitions. Is incredible at what he
Okay.
does.
Nice.
So he was the first true corporate hire. I just needed help with like underwriting. You know, did I see him becoming a partner in the company and all that stuff at the time? Of course not. Nobody did. But he rode with me for like 27 assets since the beginning.
Nice.
Most important, relationship I have in the company. Second was definitely, our head of operations. At first I didn't admire how intensive management is. And I truly was the guy that thought, yeah, like this is easy. We'll figure it out. I was quickly schooled. I mean, so quickly, like it became the most important person in the entire company. Like everything, the buck stopped with that guy, and hiring him was critical too. Um, would I do it that way again? I actually would have hired director of operations before I would have hired our acquisitions guy in
Hmm.
hindsight. And I probably would have been more careful too in how we structured incentives back then too around him, because that's a life lesson in itself, right? So people, we all need to be motivated by the same goals, or else we're not going to hit the same objectives. And so that was an education, and that would be my only change. But yeah, those are some pretty important hires.
And your head of operations now, is that the original head of operations that you first hired? Or is that
No, no, because the first guy was like one of the most experienced guys. His name is Dave Cozy. He was really like incredibly experienced, right? And he was doing as much coaching of me to be an executive as it was like, hey, just here's what a septic tank is, right? So like it was a very equal footing, but he was retired. It was a part-time role.
Hmm.
He wasn't once the company grew to a size where it was now time to bring on full-time, that had to evolve. And
Yeah.
then we had another guy, Jay, who's incredible. And then the company literally doubled in size under Jay. And it's life has a lot to do with it, right? So
Yep.
I'm anybody that knows me will know like I can run our teams pretty hard. We've grown so much in 4.5 years. That also requires a lot of hours on the back end. And if you're raising a family and things like that, you have different priorities that can come at the consequence of that sometimes. And so for those reasons, we've had turnover in those seats. But I will say I've been lucky that every step of the way we've had great, like every one of those people have had incredible footprint in the company that we have today. So
Nice.
without Dave setting the framework for Jay, without Jay setting the framework for our existing team, we would have never gotten to the size that we got to.
And what makes you feel like you hired or found good people to fill these roles? Because it sounds like you've had great people filling these roles.
Yep.
How'd
So
you
I'm like,
make sure you had the right people? Because that's the hard
so
part to get right.
no, that's right. Well, and I didn't always get it right. I think it's two things. Number one, if you make a mistake, you got to move on quick. I think it is amazing how many companies don't do that. And, if you think about leadership, if your senior person is not effective or, let's just say not effective, right? Now that is your culture of the organization.
Yeah.
So if you don't get rid of that situation immediately, you won't recognize your company in 6 months, right? And so I think that is just as important as the second thing I'll say, which is you really need to have advisors. Like I owe almost every success I've had to the fact that when I didn't know something, I went to somebody who did, right? And that's hard sometimes. Like sometimes I'm the one that am getting in my own way. I want to do something my way. I, offend everybody in the discussion because I'm very adamant on my position. I'm very confident in that decision. And then I'll talk to somebody completely unrelated about it as like a sounding board. He's like, dude, you're an idiot. Like, what are you talking about? Like, your team is right. And I'm like, oh man, you're right. But when you're in a discussion, you're maybe had too much coffee, you haven't slept, you're stressed, right? Like you're just making decisions and you'll say things and you'll be careless in those decisions. And so like, that's where advisors, man, like you cannot pay enough for good advice. In
Mhm.
deals, it's your attorneys, right? In financial reporting, it's your accountants.
Yep.
But in management, I recommend anybody, especially if they're growing, don't try to recreate the wheel, right? Like get the guys who've done it many times over at 10 times the scale, pay them hourly. You'd be shocked how affordable it is and how much people want to help. Have them coach you through it. At the end of the day, I'm a 31-year-old kid, right? I've never done any of this stuff. So you cannot replicate guys that have, right? And so it's important to do that.
Nice.
Yeah, that was extremely well said. And then even before what you said, making sure that your incentives line up with the team. And I know Dustin and I have these kind of conversations of with these partners, like how do we best incentivize? Does this format actually incentivize? It's like, and especially when you're talking about at the beginning of the business, when you don't know
Yes.
what exactly, because you can make a mistake that, like you said, is very easy to make one small little decision that kind of puts the incentive not in your favor, or they're just looking out more for themselves than for the team.
No, that's right. And I guess I've read books on it. I've talked to, again, advisors, like, there's really good attorneys and really good advisors that'll literally tell you, hey, this industry, this type of employee, here's the right incentive structure, right? And then the other side of it is just try it out. But I will say, like, my learning lesson there is, for us owners, we get very gun shy about giving ownership away. So like, you've built it yourself. You just, that's a tough. But as you get bigger, it's a necessity. Like, there's just no question about it. There are two types of organizations you can build. There's your, I guess it's an election year, so let's go. There's your Trump style organization, which is it's all Trump. Nobody even knows the guys that work for Trump. It's just Trump, right? And then there's your Coca-Cola. You might not even know who the CEO is, right? And I think for companies like Coca-Cola, you have, if you look about how they did so well, everybody had a piece of the pie. Now, that doesn't always mean equity. Sometimes that means quarterly incentives on bonuses. Sometimes that means annual incentives. You got to understand the person and their position and the things they have to care about to understand how best to get them excited about it. But when you're talking about senior leadership, no question, it's ownership. Like, that's just it. You can't make somebody think like an owner unless they are truly an owner, right? And we all, like, look, I mean, myself too, like, I am a tough negotiator. Anybody that knows me will tell you, that was a tough negotiation for myself, but it's important. And I feel relieved that we've done it, because now, as I think about, as we grow, the reason I can focus on fundraising, the reason I can focus on other strategies, and spend some time on some exciting things is because of that. Otherwise, we would never be able to do it.
Nice. I'm curious, out of now the 27 parks that you have, what has been the biggest challenge, or like some horror stories that you've had of this?
The biggest the biggest challenge, I'd say, well, I mean, I guess, yeah, the biggest challenge certainly is the fact that I've met groups that have grown like that, and then they take a pause for a year or 6 months to digest acquisitions. I think for us, I've never wanted to sacrifice growth. And so we have constantly been a bit of an acquisition machine, right? We sit here today, it's October, we're having this podcast. Tomorrow we close on an asset, and we think we'll close on 3 as a portfolio before the end of the year, right? So if you think about what that does to an organization and the management team and the integrations teams, like, it's a different pace than most companies can deal with. And we have we have 4 analysts that support that effort. It's not even like it's understaffed, right? That's a challenge. It's a challenge. And I talked to senior leadership last week, and they're asking for more time. And I'm like, nope, we have to do it in Q4. Like, these are good investments. The constant balance, you got to strike, right? Yep. Second, I'd say the horror story, man, I'll tell you, like, we all underwrite for risk, but when they happen, like, we had a deal that was in a flood zone. It got hit by a hurricane, and then we had like the spillover of COVID. There was an eviction moratorium. So some folks that just didn't want to pay rent, we couldn't go through the system to get back our inventory and re-rent it. And that was painful. We spent a whole year to get through that issue, and we had underwritten a certain level of returns, and we just never got to it. And again, like, we know, theory says if you make 27 investments, you should expect a certain percentage to not do well. But that's not the same as living it and seeing it. And especially when you think you can solve the problem, but some things are truly out of your control. That's tough. And that one, and that's an asset we're just going to exit. There's nothing I can do today that would make up for those lost returns. And that was a tough one.
Yeah. When it's out of control and just it's act of God, right? It's just
Yeah.
How do you there's nothing I mean, you can prepare a little bit for something potentially happening, but you just never know the extent of that. And it's just, you know,
No, that's right. You
the
just, but
the risk of
that's,
investment.
no, and to as you guys said, it's just you want to do what all the smart guys do, right? Like, diversify investments. If we love Florida, but the first thing we talk about with every investor is how we have to diversify out of Florida because hurricanes. And second most important thing, insurance costs, man. It's highly unpredictable today.
Yeah.
So there's been deals we had to literally not underwrite insurance because it wasn't prudent to do so. So it's you got to always go back to what do the biggest guys do and how can you implement it in what we do, right?
Yep.
So.
Yep.
And then how about the opposite? What has been your biggest home run of a deal? Has there been one deal that just kind of like was a game changer for you, for your business?
So the most memorable is actually, is the first deal with Corey, right? Because like it was small, uh, we had bought it for a price. We doubled the value of the property in like a year, but and it was so small. Like you'd laugh if I told you the numbers. I won't for obvious reasons. But like, but man, like when you do it and you prove it out, and your investors get repaid, and it's just like there is. When people say I love, why do I love the deal business? Like it's the most competitive sport that there is, right? When you get those chips on the table and you score, right? And you have those points on the board, like no feeling like it. And we
Yeah.
had our best investment was about 3.2x on total asset value. So we bought it for a price. We more than tripled the value of the asset in something like 4.5 years. That was awesome. Because to
Yeah.
read about it and to hear about it's one thing, but you sweat through it, and you did it.
Yep.
But as we all know, like those things are that's not every deal. Like as you get bigger, you're going back to normalized returns, and so they're just exciting to talk about, but that's not real life. Yeah.
So we're approaching about an hour. I do appreciate you coming on the show, and it's been an amazing show, and the information you're sharing, and it's awesome how you've grown, and the steps that you're taking there. I'm curious. You're very well educated. You're constantly learning. What is two books that you would say are your favorite, and that's helped you in your business?
Yeah. Well, remember, man, I'm first generation to go to college. So like I am not that educated. And I went to like a top 5 party school for the record. Like, so
Oh.
I just bust my butt. Like anybody that knows me knows I'll work. I mean, what, it's 8 o'clock, right? And we're here doing this. And you
Hmm.
guys, obviously, that's how this industry works. But two books that changed my life truly, and I actually recommended it to somebody recently, a friend, and Goals by Brian Tracy.
Okay. Yeah.
When I was in college, I had no idea what I wanted to do. I was, we all get distracted in college. There's a lot of fun things to do in college, and it had
Hmm.
nothing to do with focusing on a career. And I had a really good friend, Brian Osorno, and he was like one of the best sales guys. He literally is working at one of the top 3 medical device companies in the world, and he's like top in his game. Just one of the best. Like he'll sell you anything. Like he is the definition of that. And he's like, Hansel, you got to read the book. I'm like, what are you talking about, dude? I don't even know what this is. Like, first of all, I'm not asking for book recommendations. And he's like, you got to read Goals by Brian Tracy. Well, whatever. I got convinced because he's a hell of a salesman. I read that book. I still, to this day, the things I read there, I still affect every single day. And it's funny because like they use different words for it. Brian Tracy, he's setting like a rubric for how you achieve your goals. And
Hmm.
the best sentence he said in the entire book was that our minds, the way that they work is we're having this discussion. We're very live in this moment. We're not thinking about the past, and we're certainly not thinking about the future. And your mind is constantly working, right? When you write something down and you document it and you date it and you set those objectives in writing and you do what every good company does, and you revisit those goals quarterly, monthly, annually, it requires your brain to remember that where you were when you started and where you are today. And did you
Yep.
learn? Where did you make the mistakes? How do you adjust? I'm telling you, like literally my company today is a result of those teachings. Now we call it business plans and investment memos. We have fancy words for them. Same exact thing though, right? And if you want to be a painter and that's your goal, great book for you. If you want to run a company, great book for you. The other one, which is more common sense, like for me was How to Win Friends and Influence People. It's one of those like
Mm.
cheesy,
Carnegie, or yeah.
yeah, Dale Carnegie. So truly, like if I followed my passion as a kid, I would have gone into politics. But I'm first generation to go to college. I had to pay my student debt. It just wasn't for me at the time. And the political side is not as lucrative. But that book, man, to understand how people, accept flattery, understand like, the things that make people happy, to understand, like, it sounds so common sense, but like you almost need to, like, it's a book I've read 3 times for perspective.
Yeah.
And the reason why is like, they say when you read, you only retain like 20 to 30%, and I'm not that smart, so it's probably less than that for me. So like, but
Me too.
yeah, seriously, like reading is a chore for me, man. I'm not kidding. But it's interesting. Every time I read it, I get a different takeaway because I'm older and I have different context to apply. And so that's a great book. I recommend anybody. And again, the takeaway is you'll better understand the ways to get people, again, back to incentive, the way people respond to feedback, the way people get motivated, the simple things you can do every single day that will change somebody's life, right? And
Yep.
great book. I'm sure you guys have read both because I almost don't. Well, have you guys? That's my question.
So
Yeah.
I've only read like snippets of goals from Brian Tracy. I
Yeah.
actually have it and I haven't read it yet,
Come
but
on, man. You're killing me.
I
Oh my
know,
God.
I know.
Yeah.
I do have
No
the
comment. When friends influence people, yes, the Brian Tracy's book.
Yeah.
Get it today.
Yeah, I
It's,
know. I need
yeah.
I
No,
need to
I
read
mean,
it.
as I speak today, I am gifting those books to somebody tomorrow as a
Oh,
Christmas present.
nice.
I'm not
Yeah.
even like, that is how passionate I am about those books. Like,
Yeah.
yeah.
It's funny, you talked about retaining information. I'm actually reading right now Jim Quick's Limitless to
Yeah.
learn to speed read and retain more information.
Oh, really?
Yeah, because I feel like sometimes I have to read a book twice before I actually
So
retain enough of it.
does that work though? Because like people tell me it's like, oh, you read every other line and like whatever, and you get a faster reading. But I feel like I'm a deep reader. So when I read, I am so slow, it's pathetic. I
Hmm.
cannot, like some people tell you they'll read 54 books in a year. I'm like, there's no way I can even joke about that. But when I do read something, I have fundamental changes in my views.
Yeah.
And I don't know, like, does that work for you? Like
So
the,
far, like the
yeah,
little tests that he's put on there, have worked. Like there was one test where he put like 9 or 10 different words in 3 different columns, and you do it without him telling you what to do, and you try and remember. Now you look at it for 60 seconds, and then you try and remember how many words possible you can get. And I got like 3 or 4, right? And
really.
then he gives you the process to do it, and I remembered all of them, and I'm like, wow, okay, this is working. And so I was a believer, and now I'm, reading them more. This is actually, uh, yeah, I'm halfway through, but I feel like I'm going to read this one again too, just to make sure I retain this one as much, so then I can put it to the other books I'm reading. Right. So,
What was it? Sorry, what was the book? It's curious. If you
it's
feel like
it's Jim Quick, and it's called Limitless.
Jim Quick
So he's
Limitless.
a
Okay.
big brain coach. I think I'm actually going to join his, group or whatever that he's got. Right. But yeah,
Yeah.
he's I've admired him for a while. He was in a group that a mastermind that I'm in, and so I was like, yeah, it's time. I'm gonna buy the book and join the group. So,
That's
but
awesome.
but
Yeah.
cool, Hansel. Well, I appreciate you again spending this time with us. It's 8 o'clock your time right now, so like you said, you're
No,
working
it's
late.
okay. Yeah, it's all good.
So we do appreciate that. If people want to get a hold of you and maybe send you deals, how should they do that?
Yeah, no. So the best way to reach us is well, if it's for deals, it would definitely be Ricardo. So Ricardo, RICARDO at COAREMHC.com. He heads our acquisition, so he's spending every day, going through those things. We also have our website, so you can go to corecommunities.com, COARE communities.com, and you can find all of us and reach us through there. But no, or LinkedIn. I don't have social media beyond that, so I'm pretty old school. But like in
Me
that
too.
sense, yeah. But
You're 31 and you're old school. Come on, man.
dude, it's just such a distraction. No, no,
It
no. Like
is. Yeah, it
I
is.
can't do. I don't have the discipline that other people do with like Instagram and stuff. I will literally be on it for 6 hours, and so I can't do that. I've chosen to
Yeah.
opt out.
Yeah. I set limits, 15 minutes. All right. And then I have to turn. Does it always stop me? No, because sometimes I'm like, oh, another 15.
I'm
Right.
sorry, but I'm starting to become like like our parents were. People were like, "Oh, what's going on?" Like they're like, "Oh, this is trending." I'm like, "Oh, really?" So, yeah, it's pretty pathetic at 31.
That's
Yeah,
funny.
yeah.
Well, Hansel, thanks again for coming on the show. We do really appreciate it.
No, well, thank you guys for having me, and sorry for the delay in getting it scheduled. That's I'm glad we got it done.
We
Seriously.
know why. You got 27 parks and you're busy. So,
No, no, it's all right.
oh,
Nice to meet you guys. Thank you so much for taking the time.
thanks, Hansel.
All right, take care.